Hello, I'm Greg Harrison with USDA Market News Service here in St. Joe, Missouri with your national feeder cattle summary this week. Well, compared to last week, calf market pretty much $10 to $20 lower, and there's instances where it's $25 to $30 lower across the country. Yearlings pretty much on a light test, trading $5 to $15 lower. Going back to last week, this market started falling apart. Last week on Wednesday, I had limit losses on feeder cattle and live cattle contracts, and just this sky is falling attitude just expanded into last Thursday, and then continued into Monday and Tuesday of this week, where we had limit losses on Monday, and then we had sharp losses again on Tuesday. And this futures market, it just keeps stomachs turning and prices hard to manage and resentful attitudes, to say the least. But these sharp losses on Monday and Tuesday looked like it was going to dash any hopes of stability, as we were looking at going back to the extreme lows that were experienced in September. And to quote Yogi Berra, it was like deja vu all over again. But cattle futures have remained very volatile, and this volatility just appearing to be out of control. CME cattle futures rebounded then on Wednesday, and with limit moves up, and they added to their gains again on Thursday as the agony and the ecstasy of this live feeder cattle futures market just continues. There are some bearish factors out there, and they have been there from place for quite some time. We've had tremendous weather this fall to feed cattle, and cattle have performed very well. We all know about the heavyweight cattle and heavy carcasses. In many cases, the packers really haven't had to chase the market, as they have adjusted kill schedules and have plenty of cattle bought forward. The heavyweight cattle situation is improving. We have U.S. beef exports are near 13% lower than they were a year ago at this time. Then there's also, you got to remember, there's plenty of beef, pork, and poultry in cold storage. And with the holiday season fast upon us, turkey and ham right now are a popular choice. And a lot of this, when you add it all up, it's hard to get really overly bullish on this market too at this time. Also, we have a hog market that has also been had a bearish assault on it as well, as cash prices have really been hit hard, and futures and live or lean hog contracts have also been hit hard. And when you look at the price of hogs compared to cattle, hogs are pretty cheap, pork anyway, compared to beef. USDA News this week also released its WASDE crop report on Tuesday, and as the old adage goes, a big crop just got bigger, held true. Corn has a production estimate this fall of 13.65 billion bushels of corn. That added up to a 169.3 bushels per acre average, with ending stocks coming in at 1.76 billion bushel. That was up 199 million bushel from last month. Soybeans are estimated to have a record crop of 3.98 billion bushel, with a 48.3 bushel per acre average. Looking at boxed beef prices this week have trended lower, as that's not necessarily unexpected during this time of year. And like I mentioned before, we have plenty of meat protein available at this time out there. And choice boxed beef on Thursday closed sharply lower at $3.01 lower on choice at $211.80, and that's about $7 lower than what it was last week at this time. Looking at some regional weighted averages for this week in the north central region, 600-700 pound steers trading about $9 lower than last week at $186.84. 700 to 800 pounds about $10 lower at $180.90. 800 to 900 pounds trading about $14 lower at $173.89. In the south central regions, 500 to 600 pound steers trading $13 lower at $196.28. 600-700 pounds about $14 lower at $178.59. 800 to 900 pounds running about $6 lower at $174.59. In the southeastern regions, 400 to 500 pound calves running about $14 lower at $196.40, and 500 to 600 pound calves $15 lower at $179.11. This has been your markets for this week. Thanks for listening. Be back with you next week.